Good morning, gang. Good morning. Welcome to this week's altcoin update. First and foremost, remember, nothing discussed today is financial advice. It's all for educational purposes only. And now that's out of the way, let's jump in. So today, we're being asked, we're gonna take a quick recap on last week. So we're gonna look at ETH and PEPE, and then we're gonna move on. We've had requests for MONG and STX this week. So don't forget, if you guys want an altcoin covering in next week's video, then first and foremost, hit that like button and let us know down in the comments what you want covering. So now that's out of the way, let's bring the TA back and we can see what's going on ETH still. So last week we were making a video, we just come back down, we retested this parallel channel that we've been watching for a long time. Another bounce off it. Bear in mind we've already had one bounce off it, which was the old range high. Come back in, another bounce off it, decent rise. Everyone was getting extremely excited over the weekend about this pump, and this is just something just to quickly talk about here. This actually added confluence to my Bitcoin short over the weekend. Bear in mind we had very similar price movement on Bitcoin, and again all these meme coins were pumping. The whole market seemed very bullish, and I was tweeting on Twitter at the same time saying perhaps it's time to lock in some profits because the whole market seemed extremely excited. And again, everyone was looking for, you know, new highs to be made on ETH, and at the end of the day ETH just came into the golden pocket. Okay, it's as simple as that. We came into it on the Friday afternoon, hovered around again, and then we took the highs one final time. You can see here, this is the one that we did on Friday afternoon. And then if we just throw it on a line here, we did a nice little swing failure pattern of these highs. Just change this to blue, shall we? Remove that. We know there's a golden pocket there. And all we did, quite simply, was we just ran these highs, took the liquidity, and then came back down. So there's no long trade there when you're going into a higher time frame golden pocket. The only trade they have, either take profit on your longs and then hope that it gets through that golden pocket, or B, look for shorts, and then you had a simple short trigger. So again, this is why I ended up taking this trade on Bitcoin, because it was exactly the same scenario. People were doing the whole, you know, triangle, diamond, whatever breakout. Everyone's getting overexcited, and at the end of the day, you're getting excited into resistance, which always happens. You get bearish into support, you get bullish into resistance. Happens time and time again. So yeah, so since then, we've had a nice pullback. So if you caught that short, well played. That's a 10% move to the downside. And depending on what your risk management, that could have been a very profitable trade. Okay, so what am I looking for next here? Well, let's just get rid of this. So obviously we know now why we're rejected here. Very simple reason. And then now we're hovering back down at this channel EQ. So plan here is either do we maintain printing high lows and high highs, and in therefore hold this structure. If we do, once again, I'm just targeting back up here first and foremost. If it gets above that, then I'm targeting into this cluster here. That's to the upside. To the downside, if we end up losing this and getting acceptance back into this old range, that's not going to look great. So first and foremost, what you got to look for is, do we come down here, take these stops, deviate into this old range, reclaim back up, and again, you want to see that sign of strength, and I can't stress this enough. This is where being able to sit on your hands and have patience, this is where it pays off. So like, people will see this happen and they'll say, oh well, Spitty said that if this swing fails back into the old range, comes back out and then carries on moving up, then that's great. So therefore that's a long, so I'm just going to long. If it comes down here, I'm just going to long. I'm not going to wait, I'm just going to long. And then in the end, what might happen is it just drops straight back down. Okay, so this is why you got to have patience. You got to wait. You got to wait. The thing is, people get scared because people think that if it does reverse here, that it's going to run without them, and it's just going to go straight up moon, 20% move, one big candle, and you've missed the move. And that's where you get the FOMO from. And the trick is not getting the FOMO from this. Is if you do end up missing a move because it does that, then so be it. There's however many other coins to trade, so many opportunities to trade. So just because you miss one trade doesn't mean you need to get FOMO and ape in. Okay, so just wait. We're patient. If it does come down here, comes back out, reclaims this with a change of market structure, starting to create higher highs and higher lows, then you got your long opportunity. And then again, you're just trading this top part of the range with your EQ being around here. Okay? So that's first option. If that doesn't happen, then it does just come back in and we get acceptance back here and we carry on going down. And first and foremost, we've got the value area high here. In fact, let's pull this on a little bit more now so it updates. So you got your value area high here. Okay? So just around your value area high, do we get any support? If it does come lower than the value area high, we can see here on the volume profile, we've got a high volume node just lower it. So anywhere within this region. Okay? If that doesn't hold, then that's not looking great, because if that doesn't hold, then I'm going to be coming down at least to this EQ. At least this EQ. And bear in mind, we've also got this bottom side of this channel. Now, we discussed this in last week's video as well. So obviously, if you want the full in-depth one of this, go watch last week's video. But that's all I'm looking for, okay? So for now, we're still hovering outside of the old range. Get acceptance back, then I'm looking at lower down prices. If we maintain structure and we start getting higher, then I'll be targeting the top of this move, which will be 2020, roughly. And we'll get above that, then we're coming back into this consolidation here, roughly around 2100, give or take. Okay, so that's ETH. PEPE, great one. Everyone got screwed on this as usual. So we'll come down to the 4-hour chart now. Let's throw this on log so we can see this a bit better. So as you can see here, ended up playing out beautifully from what we were talking about last week. So as I was saying, openly admit I wasn't in this because I don't gamble on shitcoins. It's just not my style of trading. There's a whole rant in the Discord about this. If anybody really wants to know why I don't play with shitcoins. So last Tuesday it'd have been here. That's where we were making the video. And for me, I was saying, look, if we start to form a range here, then maybe you've got some trade opportunities out of it. And I was saying here, come down, you've already created your low, you've already created your high quite clearly. If we start coming back down, grab this liquidity from the lows, then you potentially got a long trade to continue trading this range. And then if it does break out, that's how you get involved in a trend. So once again, this is part of the strategies that I teach time and time again, and I've shared it publicly on the channel so many times that this is how you get involved in a trend. So if you did catch that in the end and you got the lows down here, now you wouldn't have been an idiot and held straight onto it. You'd have actually taken some profits at range highs because you're not a degenerate gambler. But if you did catch that in the end, you caught the last 415% of the move. Okay? All from just being patient rather than longing here and just hoping it's going to continue going up. Just waiting patiently. You create a plan, exactly what I laid out last week for you. Create a plan, trade it. And in the end, 415% move to the upside. Happy days. Okay? So, what am I looking for next on this? Well, as I were again tweeting about on Twitter, you'll see here, I always make this same, in fact, I'll go back to the 4-hour. I always make this same comment. When something goes up, parabolic, just like this, it creates no structure at all. So therefore, if price does start reversing, or should I say when price does start reversing, because not everything goes up forever, corrections are healthy, then you need to be looking at where's your next cluster of volume for support. Realistically, it's this old range here. Okay, now so far, it has come down an alright amount. We're talking in Elliott wave terms, we have hit the 1-to-1 extension. So could this be the low? Possible. It's possible. If you were just looking at this as a simple ABC, it's possible. Or does it come down lower? Now, ideally for me, if I was to participate in this, I'd prefer it to either come back down and either see what happens at these old range highs. If it gets a good reaction, then you got a long trigger. If it doesn't get a good reaction, then just carry on trading the range. And if you really are overly bearish on this, then really losing this would be terrible, because then you'd be coming back into this, effectively your accumulation phase. Now if we just throw a volume profile across the whole thing, we can see here it's actually created the value area high up here, so we're back within value here. But we can see here on the volume profile where we've got volume and where we haven't got volume. So we haven't got volume within this. We do have volume, which is pretty obvious within this. Lose this, you got a little bit of volume here, but then your bulky volume is down here. Okay? So quite simply, patience is the key. Could this be the bottom? Yes, it could be the bottom, and it could be ready for a next leg up. But for me, this does look like it's potential 5 waves complete. So now you're looking at the correction part of it. Okay. So get back outside of value. Then you can be looking for higher prices into this cluster. Gets above that cluster. Then you've got your overall top cluster. Could potentially create a double top. If that happens, look for the reaction. If that doesn't happen and it just starts to roll over, see what happens at these levels. Okay. Do we get acceptance back into this and we carry on trading this range? Yes, no. If we do, ideally you've got a range to trade and you can trade both sides of the market then, which means it gives you short setups and long setups. And then depending on which way the range breaks, one of your positions you can let run and the other will get stopped out, but it gets stopped out in profit because you know how to trade a range. Okay. So that's PEPE. So yeah, understand how to trade a range. You know, people think the range trading is just for sideways price action, but you know, learning to trade a range means you can get involved in a trendy move. If you didn't catch down here because you weren't willing to throw a few $100s into a meme coin, which I don't blame you because I'm not willing to do that, then find a range, trade the range. Eventually one side will give way. You will take a loss on the opposite side of the trade, but your winner will completely outweigh it. Okay, so that's that. Next, MONG. Again, all these meme coins, they're just so heavily shilled. You know, you get massive crypto Twitter accounts shilling low cap coins like this. And just people just get destroyed. I mean, look at this wick here. Look at this wick. I'm looking on an hourly chart here. This wick alone is 42%. 42%. That's how illiquid this coin is. Now, how are you supposed to trade that with size when it's wicking on an hourly? You know, 42, 43%. Just ridiculous. Absolutely ridiculous. Right, so what would I be looking at here? Well, first and foremost, we've got the volume profile on. We can see here. Excuse me. We're inside the value area. Okay, we're inside the value area. So we can see here we've got value area high up here. We've got value area high, value area low down here. So if this is a big if this is a low and we've come up and we've created a higher low, then next naturally we're going to be looking for a higher high, then a higher low, then a higher high, and that's what you want to see if you're bullish on this. Okay, you know, if you FOMO'd in up here, you're an absolute fool. Just 'cause you've bought it because your favourite CT influencers told you to buy it. That's the only reason why you bought it. There's no other reason. Come on, it's got a name like MONG. Okay, so if this is to hold here, first and foremost, your big resistance is right above you because you got your point of control there. Okay, so your point of control is just above. Okay, so is this place I belong in right now? No, because you're kind of in between value area low and point of control. Okay, so if you do manage to flip this, and again, create that series of higher highs and higher lows, then you potentially got a trade. Now, first and foremost, we can see here, we can see the volume spikes on this. Again, it doesn't help how illiquid this coin is, but you got your volume spikes. Let's throw it on a Fibonacci. Let's do the overall first and foremost. So we can see here, you got your golden pocket up here. Now, if we bring this down to the most recent drop, we can see here we've got the golden pocket here. So for me, if it does clear this point of control and starts coming up, then this whole zone here would be resistance. Okay? Resistance until proven otherwise. If it just goes straight through and continues up, then I'll be looking up at this value area high region. Okay? But if it does come up here, change your market structure, low time frame, then you got a short trigger. Okay? Or you take profits on your longs depending on how you're positioned. Okay? So that's to the upside. What if it rolls over? Well, if it rolls over and starts coming down here, first and foremost, you got some liquidity below this low. Again, based on this wick here, this 42% wick, who knows where that's going to stop? You're dealing with such an illiquid coin. You know, the 10k market order can probably spike this thing. If it starts coming lower, then we know we've got some unfinished business down here because we've got this massive wick, inefficient wick. So if we do end up coming down, then you just basically, you're looking for a new range to form. Do you have a new range down here? Range highs, range lows. Okay? That's something that we can look at. Let's throw it on a range tool. We use this wick low that we've got as the range lows. Use this as our range highs. We use the overall Either or seems to work, but I'm going to use this. Excuse me. Then you got a range. It's you know what, when you've got such a new illiquid shitcoin, it's you don't have the most reliable levels, in my opinion. What you want is, if you want to get involved in a project like this, if it actually has any longevity to it, then you kind of just want to see a big range forming. You see a big range form, and then you get set levels. You get set levels that you can trade from, rather than just longing and hoping that this is going to go to the moon because some knobhead says it's going to. Then you've got more technical levels to trade. But for the time being, you know, I mean, locally, it's down. It needs to change. This needs to come up and create a new high, then a higher low, and then a higher high. Okay, until it does that, it's in a downtrend. Okay, so if you're trading against the trend, then you need to be locking in your profits early. Okay, that's MONG. Again, not something that I'd be really interested in trading, if I'm being honest. Next, STX. STX, is this the... Yeah, it is. Okay, so let's bump this up. In fact, no, we'll leave this on the daily, right? So, first and foremost, volume profile overall. Okay, we can see here we had the accumulation, spike, back down, into value area high, spike up, there's your all-time high, come back down, and now we're hovering in this region here. Okay, so on top of this volume profile, what I want to do is I want to see if we can throw on a range fib tool. Range fib tool. Okay. Yeah, we can see this now. Now, anyone that's watched our most recent members module knows what I'll be looking for in this, using this range fib tool, because if we get acceptance back into this old range, then we can be looking for lower prices. So first and foremost, where we are now, we're hovering on one of the outer deviations, okay, after this big deviation. Okay, if we get acceptance back into the old range and it gets back below value, this macro, again, this value area highs from since the inception, then we can be looking first and foremost down at this EQ. But bear in mind how we came up through this EQ in the first place. Thin move. No structure being created. And again, we're looking on the daily chart here. So, do we get a reaction at this level? Be questionable. Again, this is if it comes down. Okay, but we can see here, just below this EQ, this is where we start to get a bit more volume. Okay? In fact, I'm going to pull this one back slightly because I don't want to include it there. There we go. That's better. So, lose this EQ, back down to value area low, which effectively is where the breakout happened from. Okay? So, no reaction there. Straight down, back to this level here, which is coming in 37 cents, call it for easy numbers. Okay? Lose that, then you are looking back down at this range low. So this is the initial range low, which was created in June 22, which again, similar situation to Bitcoin. Okay, so if this is just one big deviation, then gets back into the range, then we're just trading this old range. Okay, bear in mind the big volume of this old range is down here. Okay, so what happens if it turns around and it starts going up? Didn't mean to do that. Let's go that way. And what happens if it starts going up? Well, if this turns around, comes back out, starts creating new structure, bear in mind this is the daily chart and we're in a downtrend on the daily. But if we start creating a series of higher highs and higher lows, then we can be looking to target this back up. And if we are targeting this back up, then first and foremost, we're going to be looking at this high here. If it gets above that, then we're back up into this top cluster here. Clear above that, then we can start looking at some higher prices. Okay? But until we've confirmed whether this is just one big deviation of this range and we're coming back into this range, or we start taking out these highs, then we're range bound. Okay? Not overly bullish, not overly bearish. For me personally, I prefer this to get accepted back into the range and then you got an old range to trade. But until then, we need to see what happens. So we need some more data. Okay? So yes, price can go up, price can go down, but sometimes we're in a region where we want to see what's going to happen. Okay? Where we are right now, we're on this macro value area high. Okay? So I'd want to see some more data here because we've got equal lows down here, which means there's loads of resting liquidity down here, which will be a good opportunity to take it. But we've also got, we're looking on the same low time frame range, we've got resting liquidity above because we've got equal highs, 1, 2, 3 of them. Okay, so we've got liquidity at both sides. So it'd be interesting to see which side gets taken first And if it is taken, does it get a reversal? I.e., do we come up here? Do we take these highs first, then get a reversal? In that case, that's potentially quite bearish. Or do we come down here, grab this liquidity, change market structure, reaction off the old range high, and then start pushing up? In that case, that could be quite a bullish opportunity. Okay? It's all about what comes next. We need to see more data. Okay? If this comes down into this, gets no reaction at all and just rolls over, then let it roll over. Okay? See if you can get a back test. Continue of the bearish market structure and trade it down. Okay? So that's it. Very straightforward. Okay? So obviously if you want to learn how to trade like I do, and also learn the strategy that involves the range fib tool, where I think it'll probably end up going next, if we get acceptance back in here, then first and foremost, come over to our website, spitfiretraders.com. Access to our free Discord in here. You can either click this link or you can click this link. Obviously, if you want to check out what's included in our TA course, bear in mind we've got roughly around 100 hours worth of educational content. It's all broken down here, all the modules that we have. Okay, we've even got even more on this. And tonight we'll be doing our chat and chill stream where we run through Bitcoin and some stocks, and maybe some other coins depending on how fast we can get through them. And we'll be marking out our high time frame and low time frame areas of interest, and you get all that for the grand old price of £60. Or if you're working in dollars, it's $75. So yeah, access to a hell of a lot of stuff for a fairly good price. Okay, also if you come into our Discord, we've also got a promotion on as well where you can actually get access for free. Come into our Discord and check out our announcements channel. Okay, so that's that. If you enjoyed today's video, smash that like button. Don't forget to let us know down in the comments what coins you want covering next, and also if you've learned something in this video. And until next time, gang, as you were, bye-bye.